closing trades right here on ET Now. Market is perking up again, and 7175 and looking strong currently. Just before we get in, Mayuresh, Joshi, CK, if I'm not wrong, in the morning you were referring to people ideally should be buying on dips, and if it fell to about 7140 or 7130, that you would recommend the buy. So now, having said that, for people who did that purchase, should people book profits there? And two, if people want to re-enter the market, what are the levels that one should watch out for?
Well, if you had followed the buy on dips sort of strategy, then your stop loss should be somewhere at 7100 and you should continue to hold. And that's because we are looking for a buy on dip strategy with the expectation that the market will continue higher. What stop got triggered was on a breakout strategy. So for those who bought lower, one should continue to be a buyer. At the current level where it is, suddenly there has been a sharp kind of perk up in the indices after we spoke last about them, and if it goes in this vein, I think maybe we'll again reach a point where we will stage a breakout. In this context, I think the option data is indicating some sort of leaning towards the positive side. So I would say the trade to make today should be to go long. If you've waited so far and not taken a trade, then better to buy it above 7210. Wait for a breakout trade.
Okay, so those are some key levels that to monitor on the charts. So Mayuresh, Joshi, Johnson, as the index now again nears that 100 point uptick, 85 points currently. So the going seems to be good right now. Mayuresh, good afternoon. Thanks so much for joining in. There is a bit of an uptick that we're seeing in the oil-related names, Mayuresh. So be it the exploration names, be it EIL, which gets a large portion of that, and that may largely also be because of what's happening to crude overnight or even in the current session. Trading rally at best? Would you ignore, or would you search for ideas within this space?
Afternoon, Neeraj. Clearly, I think if you differentiate between the entire oil and gas pack, and if you differentiate between the upstream and the downstream companies, again, I think the bias does stay with the upstream, specifically with Reliance. Again, ONGC and Oil India are more prone to how the crude pricing will behave from an immediate short to medium term perspective, and that directly has a bearing on how their earnings will pan out. So clearly, I think Reliance is something that we continue to like and remain positive about, largely because their core capex is largely getting over. The new capacity is expected to come through, which should aid their core businesses in petchem and refining. Now, on the other ancillary part, I think the downstream companies, one really has to be a little bit more stock selective at this point of time. What capacity expansions are happening, the kind of capex plans that a lot of these OMCs have, again, are largely dependent on how crude behaves. And again, I think the inventory losses / gains is a large function on how the behavior pattern of pricing happens. So clearly, I think OMCs at this point of time, IOC is something that we continue to like with the new Paradeep refinery coming through. The complexity is quite nice at around 12.2 percentage points, and that basically gives it that added advantage of expansion of margins over the next couple of years. With Engineers India specifically, I think a large part of their book is dependent on how the OMCs perform their capex. So clearly, I think one expects around 12 to 13,000 odd crores to come through over the next year and a half. Specifically, the expansions happening at Bina, at Kochi, at Vizag, at Paradeep, by BPCL, HPCL, IOC. You can probably expect over the next 2.5 years margins to expand from 13% odd to 16.5%. It's a cash-rich balance sheet, 2,200 odd crores. We're expecting the order book to expand at 13%, close to that 5,200 crore odd mark, along with turnkey orders expected to come through. Valuations have become extremely cheap since the OFS at around 189 odd rupees. So clearly the stock might consolidate at lower levels, but with a long-term perspective, even Engineers India looks like a very good prospective investment idea to us.
Okay, Mayuresh, the other question is on the new kid on the block, and that is Quick Heal. Now, the listing has been rather tepid, and it may be falling a bit more by virtue of this whole fraud charges by the ex-employee, because the former director has moved the SEBI. They are it's a complaint alleges fraudulent transfer of shares as well. Maybe there's some service tax notice as well. So there are a bunch of things which are weighing in on the company. And on the day one of its listing, however, if you've studied this one, what are your thoughts here?
No, clearly I think these two factors are going to remain as an overhang onto the stock. So I think clearly we'll wait for clarity on what the management has to respond to these two factors. However, if you look at the core fundamentals, Neeraj, and the financials, if I may put it that way, I think it's still a market leader within the retail IT services industry. And clearly, if you're talking about the security IT services industry, the retail market expected to be between 600 to 800 odd crores. You're talking of EBITDA margins which have been maintained by the company. The top line growth has been around 16-18%. For the company. Having largely said that, I think it's a cash-rich balance sheet. There is no debt on the books. So at least before the IPO and whatever details we got till FY15, it had around 107 crores odd in terms of cash. The operating cash flows were to the tune of around 77 odd crores. And the company always had higher advertising and R&D expenses. So I think the entire proceeds, or large part of the proceeds, are towards R&D and advertising, because they need to create and expand their brand presence in India. And clearly in terms of the potential market size, I think it's pretty large for them. So if you talk about the internet users going up from 350 odd million to around 500 odd million over the next couple of years, you're probably talking about mobile internet penetration going from 175 million odd to 300 odd million, with around 7 million odd customers that they've got. It looks like a stable business model, but again, I think these two factors are going to create a deterrent and probably an overhang for the stock. So let's wait for clarity to probably happen on the stock. And the valuations, again, around 38 odd times, they've probably contracted a little bit in terms of how the multiples have panned out in today's trade. But clearly, I think would wait for clarity to happen on the factors mentioned earlier, as well as I think valuations to contract a little bit more to give some amount of earnings breathing space going forward.
Plus, I think the last couple of years of trajectory also slightly different for Quick Heal compared to some of the others which have come out with their IPOs. However, it's 2:55, so let's get in some more trading ideas from our experts. The market is in fine fettle, at least as of now. Mitesh, global markets not as hunky-dory as they were yesterday. What would be a good trading idea be at 2:55?
Yeah, I would choose a buy on HUL. That's one stock which is showing good pattern on the charts. I think can be bought with a stop below 818 for targets of 850.
Okay, Hindustan Unilever is Mitesh's idea. It's a buy call despite, as I said, while the global markets are not supportive, but 2% is not a mean move in HUL. CK, what about you? Your top idea?
I would buy into a Hero Motor at the current price of about 2610, 2615. Keep a 35 rupees stop loss from my entry point and look for a target around 2700 plus.
Oh, we're not even talking about the ONGCs and the Reddies. We'll do that in a bit. On the other side, in fact. Take a very quick break. Come back with more.
Welcome back. You're still watching Closing Trades right here on ED. Now, half an hour for trade to close, and the market has come back, not with quite a bang, but still at least making that attempted pullback at the 7200 mark. Dr. Narayan, let's get in your chart of the day, 30 minutes into close.
Well, for chart of the day, I picked actually on BHEL, which shows a pretty interesting setup right now. Stocks have been down quite steadily and have now reached long-term bottoms around 100 rupees. Now this 100 rupee bottom was made in 2013-14 and we had seen a pretty decent rise emerge from there. Now as it winds down into 100, the other accompanying indicators are all pretty bearish. So it seems like a bit of a toss-up whether the old low of 100 will support the stock or this time around it's going to break. If you look at the surrounding indicators, it's like that Dale is going to give up. But if the market were to find its feet here and try to rally from here, because overall the market is near support, then the chances are that the 100 support might survive and we'll see a rally. So either way, I think one should have bail on the radar right now, if not exactly a trade immediately on this. We look at the market. If the market survives, then bail is a buy. But if the market were to not really pull out into a rally, then I think the 100 rupee support will break and then we should have a drop of about 10 points from there.
some alerts on your screen, but I want to stick to BHEL. And there is also a treehouse which is cracking in trade, and there are some banks which are doing well in trade. But Mayuresh, come in on BHEL. 103 or 102, trading very close to its fresh lows for itself. And so many queries asking us what do you do with BHEL, because people invested at 120, 130 thinking that the fall was done and now there'll be a bounce back. Somehow it's just been one big laggard. What does an investor who got into the stock at 120 or 130 now do? I'm sure these guys didn't try and research the company enough, else they wouldn't have done it, but they are caught now.
So clearly, Neeraj, I think they have to wait it out, and I think patience is going to be key in a stock like BHEL. Look at the financial performance over the past so many quarters, and I've been harping on this point for so many quarters now, that the underperformance is quite evident in terms of how the financials are getting played out. So clearly, I think there are execution worries that are happening on the balance sheet. You probably got orders to the tune that one really expects over the past few quarters. But again, I think will this sustenance in order flow continue over the next few quarters? That is a big question mark and an uncertainty. In terms of the working capital cycle, I think it is still stressed out. Again, the cash position is dwindling. You're probably looking at higher employee costs coming through. So clearly all these factors are not playing on the balance sheet. I think these woes are not going to go away in a whiff. So clearly I think this underperformance that BHEL is meeting out, I think will continue for some length of time. So I think investors who have invested in the stock at higher levels have no choice, in my opinion. I think they have to extend the time horizon. That's point one. And B, I think you should be having tons of patience, still amount of execution capabilities returned back in terms of either cash flows improving, the order flows improving, and again I think margin showing some increasing trend. But that is going to take some time. So I think the underperformance might continue for the next couple of quarters. You would recommend
staying put with BHEL, Mayuresh, as opposed to switching to a better managed capital goods company?
But clearly, I think, Neeraj, the stock will perform over a greater period of time. For the next few quarters, the stock underperformance is going to be very, very evident. So I think if I take a call on the sector itself, I think the sector is going through painful times as well. So I think you take into instance L&T, for example. I think they've revised their order flow guidance, they've revised their revenue guidance downwards. And this clearly reflects the kind of mood and enthusiasm that we're probably not seeing in the capital goods space. So I think the order flows are dwindling, the execution is not happening fast. The net working capital for even a company like L&TL is close to that 24% mark, though it has not deteriorated. So clearly what you're talking about is fall in energy prices creating some amount of issues and uncertainty in that space itself. You're probably looking at slower order flows coming through over the next few quarters as well. I think some domestic orders will flow in, but again at what margins they flow in are going to be very, very important. Again, I think if you do a company-wise bifurcation, I think you look at Siemens, you look at BGR Systems, and I'm not recommending stocks here on all these parameters, but clearly I think one needs to be very, very selective in this space.
Yes, one needs to be. But by the way, I just want to mark the index right now because that is trading close to the day's high, and let's shift focus to what's moving. So in the last 45 odd minutes, Vedanta, Tata Steel, BOB has been made a bit of a comeback from the kind of levels that it was trading at. So if you look at the intradays, these are the stocks that are actually just moving up in the last few minutes of trade. Tata Steel back into the green. Bank of Baroda too, I think, has moved back very, very sharply in trade. So good going for that stock as well in the last 15 minutes. And then, of course, certain specific banks. So this is BOB, there will be Kotak. I'm sure a few others will come about. ONGC is 4.5%. Hindalco is up 5%. Dr. Reddy's is at 3113. That's a really strong move for a Reddy's as well. So good contribution really from a bunch of these stocks right now. Mitesh, come in. The kind of move that we're seeing on the index now, despite there being slight global sluggishness, we are back to 7,200. What would you be doing? And within the large cap names, is there a trade that you would want to initiate right now?
Bias. We had a buy today sometime at noon also around 71, 30, 40 mark. Yesterday also I think we suggested that any dips should be used to buy into this one. I think we are heading towards 70 to 50, 70, and that's what I believe. I think, as I said, the indicator setup is this time much more better than what we had on Monday on the intraday chart. So my sense is that I think there's a good chance that we'll head towards 70 to 50, 70, which is where some kind of strong supply might come in. On the large cap names, I think I would, I've already given a buy on HUL. I think Reliance is something which I'm considering. I think that's one stock which I like a lot in the sense that it's kind of trying to do some base building and reverse. I think if the stock can start getting past 955, then I think there'll be a slightly bigger trade or a slightly more stronger uptrend over here.
Okay, and the rally is percolating, of course, to a bunch of mid caps as well. Crompton Greaves, I believe, has done rather well for itself. Bring up that stock for you. That's up 10%. ABG Shipyard is now up 18%. That's a big move. Jain Irrigation has moved up quite strongly in the last 15, 20 or 25 minutes of trade. So that stock too, I think the intraday will show you that there is a bit of a spike that has come in to Jain Irrigation as well. 9.5% higher in trade. CK, you do track Jain Irrigation if I'm not wrong. Before we come to the index heavyweights, a quick word here.
Well, Jain, the upper in it should not be too surprising. All these fertilizer stocks, these irrigation stocks are always in demand just ahead of budget. And with Jain falling to almost near all-time lows or nearabouts that, I think people are perceiving very low risk. I don't think there are any chart patterns in it to buy. I don't think there is any fundamental news in it to buy. I think this is just plain punting for, with a 2-week view towards the budget. That's what I think it is. And it's a trade worth doing because your risk is not very much.
Showing in some of the others as well. I think EPC Industries too has bounced up. So I think some of these irrigation and related names, the budget related moves are certainly happening. 134 or 135 for EPC as well. Actually, Mayuresh, a quick word on EPC. I think you track this one.
No, unfortunately, I don't track that, Neeraj.
Oh, okay. My bad. Never mind. Some other names, Dr. Reddy's, 2 days in a row now. I think it's gained about 10%. Mitesh, come in on Dr. Reddy's at 3112. What would you do?
See, Dr. Reddy's was a buy yesterday with targets of around 3125. I think it might, get past these levels, and if it does that, I think, then we are looking at possible targets of around 3250 over here. So the setup is quite positive. It's a stock which has gone through a big correction, now trying to go through a counter trend rally. I think let it close about 3130, then I think 3250 should be the next logical target.
We are above 7200, 7201, and a lot of stocks contributing. I think one heavyweight which is also contributing. Remember, I think the biggest weightage right now on the index in terms of the movers for the Nifty is due to Infosys. Let's not be under any doubt. It's contributing almost 14 odd points to the kind of move that we have on the index right now. Then it's ICICI Bank, which is up 3.5%. Again, a heavyweight which is contributing. And then ITC. Out of the blue, I'm seeing ITC make a move. And if HUL was a buy, ITC too is not doing that bad. CK, two heavyweights. Infosys we've discussed enough. ITC, ICICI Bank. Chalk and cheese, completely different companies. What do you do here?
Chalk and cheese, they may be, but on the charts, they have both been rather similar because they have both been, down and out for under the brunt of a lot of selling. So I think they may be staging a bit of a rally. But I think taking up on that particular point that you made, that, things like ITC, Liver, Infi, ICICI, now these are all index heavyweight stocks. You got Kane, which is up. You got ONGC, which is moving up. You got Reliance, which is moving up. And all this is actually indicative of possibly a rally in the making, and I think it will not be very, very soon we should be seeing the index charge upwards. So all those heralds are up in the making, and therefore I would think we should take these as a signal that the rally is well and truly on, and that we should now remain firmly bullishly biased on the market.
Okay. I just wanted to get in a quick perspective, and Mitesh, perhaps you could come in on this. The CNX IT index, what's the call there? And, individually among the names, where is your preferred bet?
See, the Nifty IT, I think, the level which I have been worried about, the level which I am looking on the upside is 10,800. If it starts crossing that, then I'll be, more positive over there. So for the timing, the only stock which I like is Infosys, bouncing back from the 200 average. It's hit the first targets of around 1130.40. Above that, I think, I'll look at trade to about 1185.
There's traction there. All IT names, I don't know whether it's the rupee or whether it's just buying that is happening, but it's a really good move that is happening in the IT names today. Infi is, of course, that big one. the big boy, but TCS, Wipro, HCL Tech, all the top 4 have moved up. To the heavyweights have moved up in IT, and which is why CNX IT or Nifty IT as we call it is doing what it is, because the biggies are making a really smart move. What's the pecking order here, Mayuresh? In large cap IT, the top 5, what is number 1? What is number 2?
So again, what we like is Infosys, HCL Tech, followed by TCS. So clearly, I think if you look at how the trajectory has panned out for all these majors, client mining activities have been extremely strong. You're probably looking at tailwinds in terms of utilization levels going up, specifically in the case of Infosys. For HCL Tech, again, I think the kind of transformational deal wins that they've been doing, $1 billion wins again in the last quarter, more offshore work getting through in terms of efficiency gains. You're probably looking at utilization levels being extremely stable and valuations being extremely attractive for HCL. So again, I think the pecking order is Infosys, HCL Tech, TCS.
I think Emphasis during the intraday today too had a really smart move, cooled off a bit, but still up about 5%. So, well, there's something happening as far as IT goes. Maybe it's got to do with the currency, maybe not, maybe a few other things, but almost everything in Nifty IT seems to be doing okay for itself. NIT Tech is the sore spot, but otherwise, I think the stocks are extremely buoyant. Info Edge has about 1.5%. Not to forget, Just Dial has had a good move too. So that's essentially summing up what the IT action has been in today's trade. 7199 as we come to the close. Remember, the globe is not as hunky-dory as it was yesterday, but I don't think you can complain. That's fine. The market by itself is doing okay. What is not having a good day though, just before we hear out what Ravi Muthukrishnan had to say, is Quick Heal. The listing is now trading at the lowest point of the day, 21.5% down for Quick Heal. So somehow this is not turning out to be a great day. And this comes on the back of TeamLease, which actually had a stellar listing and continued to move up. So while that IPO has made a lot of money for investors, this one got subscribed 11 times. TeamLease may be down today, but it's done extremely well since listing. Quick Heal, sadly, first day itself is not doing that great. Treehouse Education too, by the way, now trading at the lowest point, down about 12.5 to 13% at 75 rupees. So there are some losers. But speaking of winners, speaking of trying to pick out winners, Ravi Muthukrishnan of ICICI Securities spoke to us earlier. Hear out his top investment ideas in the consumer discretionary space.
As volatility settles down, we believe that India being relatively a better story in terms of its fundamentals, we think money should start coming back to India. Next 2 quarters, we think that the earning numbers should improve, assuming the fuel cost remains at the level they are, commodity prices were to drop further or remain at those levels. The consumption, we've always been maintaining since the year beginning that for us 2 themes will work this year. One is government spending, the other one is consumer discretionary spends. REC, we said this because, they perhaps are the only government-backed company which lends to the power sector. They have a fantastic model of, wholesale borrowing. The cost at which they borrow is very, very low. So the margins they make is pretty high. PC Jewelers, because of a lot of innovative things they are doing in terms of coming out with new schemes and stuff like that, I think there's a lot of potential for upside in that stock. See, Ultratech primarily we put in because of the government spend. Nothing else. And again, if you look at it more indirectly, the same 7th commission thing also stands to benefit this company. Coming to L&T, no doubt it has been hammered. It even hit a 52-week low. But again, if you really have to play the GDP growth story in India, you don't want to be caught unawares when that actually starts happening.
Yes, indeed. The tipping point is very important. You don't want to be caught unawares if the on-the-ground activity has improved and the market starts pricing in before fundamentals actually start showing a decisive uptrend. Darshan as well as Yatin join in with a quick perspective of what's happening on dealer desks. 10 minutes into trade as always. Darshan, you go first. What are you hearing?
See, Infosys is something that dealers are talking about. There is FII accumulation that is happening on Infosys. If you see, today's move, one of the largest contributors to the Nifty up move today has been Infosys. It's been doing well, has a large weight on the Nifty itself. So over the past 2 or 3 days, we've seen that Infosys has either been the one that has actually is actually taking the Nifty higher, or the one that is actually being the one that has actually been able to stop a majority of the fall on the Nifty. So it's been doing rather well because of its weight also, as well as the buying that is seen. So Infosys for one is something that dealers are talking about. HCL Tech, if you see the open interest build up today, it's up almost at 25% is the open interest build up that we've seen on HCL Tech. It's moving up on high open interest build up and high volumes as well as high delivery volumes today. So HCL Tech, there is definitely something cooking. It's up almost 2.2% in trade today, but there is accumulation as per the FNO trends. And the last one is Ramco Systems. There is a buzz of a possible corporate announcement that could come into the counter. What it is, we are not aware, but this is the general sense that we are getting. It's up almost 2.7% in today's trade.
Thanks very much for that, Darshan. Yatin, come to you. What is it that you're hearing from your sources?
Tanveer, there is some general strength in financials, and if you look at ICICI Bank, decent open interest build up, good long seen in the future and option segment. So purely on the basis of FNO trends, ICICI Bank is something wherein dealers are recommending a BTST trade. Also, similar trends are seen in ITC, and there is always a budget scare about luxury tax or probably a sin tax, but that is all in the price is what analysts are talking about in ITC. And at this point in time and this price point, there is some valuation support, and domestic funds are said to be buyers in trade. And do watch out for Jain Irrigation. There has been a lot of talk in the budget reports and in media in general that the government will focus on rural consumption and rural markets, and irrigation is one focus point of the budget this time, according to the circles in Delhi. And probably if the irrigation allocation this time in the budget is quite high, Jain Irrigation is a direct beneficiary. A lot of their orders comes in from the government side. So on the back of that news bit, there is a lot of accumulation which is happening in Jain Irrigation. I think the stock is in FNO ban, if I remember it correctly. But in the cash market also there is some big accumulation which is happening in for Jain Irrigation ahead of the budget.
You bet it is. All the irrigation names somehow are doing very, very well. I'm just waiting for that big rally to come in railways. Somehow that hasn't happened this year around. Thanks a lot for that, Darshan, as well as Yatin. They've moved up, but not really too dramatically. It's just been a fairly muted move for the railway stocks until now. No big bang move that typically comes in. So let's see. By the way, just before we get in closing strategies, I'm somehow referring to Treehouse a lot today, but it deserves a mention because it's now down 15% on almost 1 lakh shares traded on the NSE, and that is at 72.60, trading in at the lowest point of the day. So a very bad move for Treehouse, frankly, in this session today. Okay, and Quick Heal too, 248, that too trading is at the low point of the day. But closing strategies from our experts because the market is trading well. Now, CK, what would be your top closing strategy for today?
Want to go long in Britannia at this rate of around 2750. I think stock has been faring pretty well. BTST on Britannia might prove profitable. It's 50 rupees as the stop because this is a more volatile stock, and we can look at a target at about 2850.
Right. Mitesh, what about your closing strategy?
I would choose a buy of BTST on Lupin with a stop at 1755 for targets around 1810.
Mayuresh, your top 3 investment ideas right now?
No, clearly I think we're still sticking out within the large cap names to companies like an Ultratech Cement, where our belief is that with cement capacities that they possess, with realization expected to stabilize, demand growth expected to come back over the next few quarters, will definitely have an impact in terms of how the return ratios pan out. Having a pan-India presence also helps. I think Ultratech is something that we continue to prefer within the large cap universe. As I mentioned earlier, I think within the IT names, HCL Tech is something that we continue to like. Our own take is a 13% 8% growth, both in dollar and rupee terms. That's going to aid the company in getting that constant currency revenue growth that they're looking at. Transformational deal wins have been substantial. We expect that to continue. Engineering services is going to be a big margin driver for the company. And within the pharma space, again, I think something like Cipla or Dr. Reddy's is something that we prefer at this point of time. Dr. Reddy's, again, I think the kind of buyback they've announced is going to be EPS accretive. The FDA concerns that we're probably talking about the fall in price is just taking a lot of that into account, and we're probably still talking about an earnings growth in excess of 17-18% over the next couple of years. So valuations are looking attractive. There's a strong ANDA pipeline with a mix of paraphors and FTFs, and valuations not too expensive, as I mentioned earlier.
Okay, what else? D-Link is up 20%, ABG Shipyard is up almost 20%, Gokaldas Exports has some traction on good volumes today. There are 2 or 3 mid-cap names that come to the mind. Look at that move on D-Link. I think the more impressive move is on Gokaldas Exports and ABG Shipyard, of course. Extremely good move. Well, Gokak Testas, I don't know what Gokaldas Exports certainly has done very, very well. Liberty Shoes about 11% higher. Shreya Shipping up 10%. Bliss GVS Pharma is up about 10%. So a bunch of mid-caps and small caps have done rather well for themselves in the session today. But we'll stick with the large caps, and just about 2 minutes left to trade. So let's try and figure out what's the view of our experts on some of the top movers in trade. It is surprising we haven't discussed Maruti today, maybe because we've been busy talking about the gainers that we forgot the losers. But Maruti Suzuki, Mitesh, how would you carry home a trade if you had one?
John, Maruti, I think, the stock is trying to bounce back from oversold levels, but I'm not sure that it's giving a reversal. I would want to trade it only if it's about 37.10 and then trade on the long side. So for the time being, it's an avoid for me.
Okay, and Asian Paints is the other one. CK, while we've been speaking about the gainers, this is the top loser on the index. What do you do here?
I think Asian Paint has been a huge disappointment to most of the traders, because all other paint stocks have moved except for Asian Paint, and people just can't figure it out as to this is supposed to be a leader stock and why is it not going up. Be that as it may, it's actually starting to go down now, and it's now actually under a threat of breaking down its recent supports at about 820, 825, which does not augur well at all were it to happen tomorrow. So right now is not a time to buy Asian Paints. We may have to look at it if the support level at 820 breaks from a bearish mindset, but then it would, I think, go down only in a weak market. In a stronger market, probably the support should survive. So right now it's in a bit of a no man's land.
Right. General, let's start winding up the market. Thanks for your insights. We'll just come to you for your closing comments. The index closing up about 1% for the mid caps, 0.25% for the small cap, but for the Nifty just shy of the 7,200 mark. There is resistance at that level, and that's clear from the intraday graph. I mean, if you take a look at just the intraday move, twice we've gone past 7,200. Twice we've done that, but have again seen pressure not to take the market forward from there. So actually thrice, 3 attempts at 7,200, and all 3 have failed in the session. So it remains to be seen whether the market can actually break past 7,200. But suffice to say that we're closing with a % gain on the benchmark indices. Hindalco is your top gainer. Dr. Reddy's is well past 30.15 the session today after the buyback price was put out at 3,500. ONGC is 4% higher. Hero Motocorp, CAN, ACC, Z Entertainment are some of the other prominent gainers. Most of the other gainers from the IT basket, the CNX IT index, have gained anywhere between 1.5% to 2%. So not major exaggerated moves there. On to the losers, and Maruti Suzuki, Asian Paints, BHEL, Reliance Industries, those are some of the laggards.
Lots of losers, lots of winners. Quick Heel, by virtue of it being the new kid on the block, deserves the first mention because it's had anything but a good listing. 21.5, 251. It's down and out in trade, as is of course Treehouse. This is the 6th time in the show that I'm mentioning that stock, but mentioning it nevertheless. 14% off in trade. Balkrishna Tires has a 5% downtick. Gujarat Pipavav has a 5% downtick. Today, I think the port companies have taken a bit of a pause. Adani Port too, marginally in the red. What's doing well? ABG Shipyard up 19%. Jain Irrigation up 9.5%. Shri Cement has had a big move, 8.5% at 10,900. Good going. Crompton Greaves off the highs of the day, but look at those volumes, 9 million shares on Crompton Greaves on the NSE. So really big move there. Sterlite Tech, again, accompanied by good volumes, doing okay. Cox & King is accompanied by good volumes, doing okay. There is strength in Emphasis. Spoken about how IT by and large is having a good day, at least the large cap IT space. I think Stride Sashan, again, not at the high point, but I think doing okay. 4.5% at 920. The other stock that's not done too badly. Small caps as well, and let me try and do that. Firstly, I want to bring up financial technologies, and that stock has actually not done well. So just bring that stock up for our viewers after having a couple of good days. It's just correcting in the session today. What else is doing well though? Bliss GVS Pharma, a small cap stock, doing okay. Surya Roshni, I think they backed some order, 6.5% doing okay. EPC Industries along with Jain Irrigation. So that whole pack of irrigation rate companies has not done too badly. And last but not the least, we've been talking about how the oil related companies have done well. Ceylon Oil Exploration, 5.5% at 170. That's not done too badly for itself. Inox Leisure, amongst others, also trading in the green. So those are some small caps. But largely, the day belongs to the winners, 1% higher in a slightly iffy global scenario. And CNX IT, I believe, has to be thanked in a big way, but selectively, even the FMCG names, the likes of HUL and ITC, have played their part. I think they've done rather well for themselves and helped prop up the index. Remember, ITC, 5% weightage on the index, and the BSE FMCG index out there shows what HUL and ITC have managed to do and given that show to the index as well. All in all, a good day of trade. Let's get in final thoughts from our experts. CK, not a bad day. We probably not at the day's highs, but I think considering what the world is doing, this has to go down as a good day. What would your near-term approach be now?
I think it's more than a good day, Neeraj, because we should, I think, take a look at the option data. For the first time in many, many days that I see aggressive writing in the puts, or at least aggressive volumes and OI addition in the puts. The near the money puts, let's say 7,000, 71, 72 included, have added nearly about 35 to 40 lakh shares between them. And these similar strikes, which are also near the money on the call side, have all seen shedding. And if you look at slightly above the current level for the calls, they've all added very, very small amounts in the region of about totaling about 10 lakh shares only. So I think this is clearly indicative of a fact that possibly, bullish positions are being taken through short puts, and this will be for the first time that in the entire series of, let's say, declining days that this is happening. So I take that to be a very positive indicator. Couple that with the very reasonably good closing of your Nifty future, somewhere other near 7,200, 7,187 is where we finish near the ending. I think collectively this is pretty good. Now you throw into this mix a very decent breadth, and a breadth which is composed of leadership. You got ITC, Liver, Infi, TCS, ONGC, Kane, ICICI Bank, and you got all leader names which have gone up. I think this makes for a pretty decent mix, and I would be very hopeful for the market tomorrow, and I would be greatly disappointed if the market does not take up the baton now and sort of run ahead with it. So let's see, tomorrow ought to be a very, very interesting and a very good day also.
Mitesh, what would your approach be? Because, till now we've been talking about banks supporting, so on and so forth. Today, CNX IT has come up in a big way and held up its hand. FMCG is not done too badly. You had a call on HUL as well. How do you think the near term is looking like?
Yeah, Neeraj, I think, one, clearly, I think Dr. Narayan talked about the F&O data, which is quite interesting. Definitely, I think, suggest an upside bias. I think also the fact that I've been highlighting this, that the indicator setup is much more positive than what we had the last time we were trying to get past 7,200. So in that sense, I'm still hopeful. I believe that we should get to about levels of 72.50, 72.70, maybe beyond that, but that's the next very important target, where some kind of strong supply can emerge. So for the time being, I think, I'll maintain a positive bias. We're trading with more of long bias on stocks and look at targets for around 72.50, 70 and then take it from there.
Great. Mitesh as well as CK, thanks so much, gentlemen, for joining in and giving us that perspective. Mayuresh, what would your message to your clients be, considering that we've had about out of the last 4 or 5 trading sessions, we've had 1 bad and 4 good trading sessions?
So clearly, I think the message still is that the volatility and the uncertainty in global markets will continue. That will have a rub-off effect on how the Indian markets behave. And clearly what happens with the budget is a very important thing to be noted in terms of the fiscal direction, in terms of how the economy will move going forward. Again, I think the 7th Pay Commission and the kind of monsoon trends that we are probably expecting this time round, I think the discretionary spending, specifically on the rural side, is expected to be much better than what it was last year. Earnings again expected to be supported because of the low base that we're probably going to carry in the coming fiscal as well. So clearly I think a few of the stocks within the consumer discretionary space, as I mentioned earlier, a few of the cement stocks, a few of the IT stocks, a large part of the portfolio again should be a mix of defensives and again a few of the economy related stocks, whether that's infrastructure, capital goods, power, where the government focus is. So clearly I think one needs to be selective in these markets, have a bottom-up approach, but clearly not investing more than 15-20% even at this point of time.
Okay, thanks very much all 3 of you for joining us with your insights to the market, sharing with us your investment ideas, also your trading strategies for the benefit of our viewers. We'll take a short break on that note. It's a decent close to the market, as both Neeraj and Dr. Narayan pointed out. Something that you can, even though the selling pressure coming in at 7,200 and the market couldn't break past that level in trade, it made 3 attempts to do so. So, it goes down as a decent session, as a positive session in trade. When we come back, we'll get you some post-market analysis on what to watch out for from tomorrow's trading session.